The Coca-Cola Company just released their latest quarter's earnings and the stock is up big on the day. It's currently up about 3.66%, which is actually pretty high when you consider how mature this company is. So the stock is now trading at $66.91. And if we look at the headlines, we can see beats on top and bottom lines. Q4 non-GAAP earnings per share of 55 cents was a beat by 3 cents, and revenue of $11.5 billion, up about 6.5% year over year, was a beat by about $800 million. But here's the key headline. Coca-Cola rallies after smashing organic sales expectations. And we're going to compare this to where Pepsi was. If we scroll down, look right here. Organic revenue was up 14% during the quarter, and that's notably higher than Pepsi's, which was up about 2.1% for the overlapping period. So they grew at a way higher rate than their rival Pepsi. If we scroll up, we can see where this growth is coming from. Organic revenue, again, 14% during the quarter, versus the 7.2% consensus. So they way beat expectations when it came to organic revenue, led by gains in Latin America, up about 25%, Europe, Middle East, and Africa, up about 17%, and North America, up about 15%. So there's a lot of positives, but there's more to break down. So let's go ahead and start digging into this. Now, to start off, we can see Coca-Cola is a company that trades at a forward price to earnings of about 22.62. And if we look at earnings estimates for this company over the next few years, they're not necessarily very high, but that is to be expected for a mature company. We're talking about 3, 4, 5, 6, or 7% earnings growth. And we'll dig into that here more in just a moment. But let's go ahead and start digging into this earnings report just a little bit more. Now, when we think about Coca-Cola, why are most people buying this stock? Yes, obviously you want to see organic growth and share price appreciation, but a lot of people buy this stock for the dividend. So remember, dividends are paid out from free cash flow. So if they're going to be able to grow their dividends over time, we have to analyze what's going on with the company's free cash flow. And we can see this broken down right here, cash from operations and free cash flow. Now, when we look at this at first glance, cash from operations came in at $6.8 billion for the full year, down 41%. Free cash flow was $4.7 billion for the full year, down 51%. So what's going on? Well, let's put this into perspective. If we jump over to my dividend breakdown sheet, come up here and plug in Coca-Cola. Now, what we can see is the starting dividend yield for Coca-Cola just a little bit below 3%, about 2.9%, and the dividend's been growing at a rate of close to 5% over the past decade and closer to 4% over the past 5 years. But here's what we need to pay very close attention to, that free cash flow payout ratio. How much of the company's free cash flow is being used to pay out dividends? And in 2023, it came in at 81.58%. So obviously, we can see in 2023, free cash flow was about $9.7 billion. So if we saw a drastic reduction in free cash flow wouldn't be able to sustain those dividend payments. But like we just saw, free cash flow was down about 51%. So what's going on here? Well, it's not telling us the full picture in this specific scenario. We can see free cash flow excluding the IRS tax litigation deposit was actually about $10.8 billion for the full year, which was up 11%. So Coca-Cola actually saw double-digit free cash flow growth. I don't think a lot of people saw that coming. So this adjusted metric provides a much clearer picture of Coca-Cola's financial health without the impact of the unusual legal-related payments. And this is a clear example of sometimes why you have to dig into what's actually going on with the numbers to get the full picture. So if you're an investor in Coca-Cola or interested in the company, this is a very good sign. Free cash flow up about 11%. So to put that in perspective, free cash flow at $10.8 billion would put the 2024 free cash flow close to about right here. So free cash flow easily covered those dividend payments in 2024, and we likely even saw the free cash flow payout ratio go down, which is a very good sign. Now, if we dig into this earnings release a little bit more, let's see what's been going on with the company's earnings per share. Now, like we saw earlier, fourth quarter earnings per share grew by 12% to 51 cents per share, and comparable earnings per share non-GAAP grew by 12% to 55 cents per share. But one of the things we can also see is full year earnings per share declined slightly to about $2.46. Let's put that into perspective as well. If we jump over to the stock screener, I've already plugged in Coca-Cola. And like always, you can download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet by going over to tickerdata.com. There is currently a Valentine's Day sale where you can get a 7-day free trial as well as 30% off the annual plans. Now, back to Coca-Cola, what we can see with earnings per share. In 2023, it came in at $2.48. And again, if we look at full year for 2024, it came in at about $2.46. So we're talking about a very slight decline, but what we really want to look at is what are the forward-looking projections for Coca-Cola? Are they projected to grow earnings at a healthy rate moving forward? And management team did give us some guidance in regards to that question. If we scroll down a few slides, we can see the full year 2025 outlook. The company expects to deliver organic revenue non-GAAP growth of about 5 to 6%. If we jump over to my profitability statement sheet, we're already looking at Coca-Cola. We can see the 5-year revenue CAGR coming in at about 6%. So that's pretty much in line with what management team is projecting moving forward. But here's what's really interesting. If we come down here, the company expects to deliver comparable currency neutral earnings per share growth of about 8 to 10%. That's pretty fast earnings growth for a very mature company like Coca-Cola. But then if we come down here, the company expects comparable earnings per share non-GAAP growth of 2 to 3% versus the 288 in 2024. So what's up with the massive difference? We're talking about growth of 8 to 10% when looking at it on a comparable currency neutral basis. But then if we don't, it's growth of about 2 to 3%. That's a pretty big difference. So here's what this means. Coca-Cola's core business is expected to grow very healthily at about 8 to 10% earnings per share growth. But currency headwinds are reducing reported earnings growth to just 2 to 3%. That's a pretty massive difference. So this 2 to 3% earnings growth is what actually includes the impact of currency fluctuations. So if the US dollar weakens, reported earnings per share growth could actually improve, and conversely, if the dollar strengthens further, it may continue to pressure earnings. So just like we saw earlier, Coca-Cola has a pretty diverse geographic revenue mix, which in a lot of ways is a huge advantage for this company. But the downside of this is currency fluctuations, which at the moment is definitely hampering the future earnings growth rates. Now, something else we want to talk about for Coca-Cola is going to be the margins. And if you just look at the margins on a quarterly basis, it's not going to tell you the full story. For example, if we look at the past 4 quarters, it looks like the margins are getting worse. But again, this is why it's so important to dive deep into the numbers and actually understand the business that you're looking at, because we can see this is completely standard for Coca-Cola. Typically, the first 3 quarters are going to have higher margins, followed by a lower margin Q4. So actually, if we look at this on a yearly basis, we can see that gross profit ratios remained very steady over the past decade, with a 10-year average of about 60.5, and in 2023, it came in at 59.52%. So overall, this is a very positive earnings report for the Coca-Cola company, but are they trading at a good value at close to $67 per share, up about 12% over the last year? Well, to answer that question, let's go ahead and jump into my stock valuation spreadsheet and come up here and plug in KO. Now, before we look at the first valuation, what we want to point out is the beta is very low, sitting at 0.62. So we're going to see less volatility with this stock than compared to the S&P 500, which to a lot of dividend investors is a pretty attractive factor. Now, the first valuation we're going to look at is going to be our discounted cash flow analysis. Now, this is going to be a unique scenario because obviously we want to go with the adjusted free cash flow number that we saw for Coca-Cola, which came in at about $10.8 billion. So let's go ahead and plug that in. Now, if we assume a free cash flow growth rate for Coca-Cola of about 8%, which I previously thought was a little bit on the high end, but after this recent earnings report does look like it could be achievable, what we can see is we'll come to a discounted cash flow price per share of about $58.28, which to be fair is still below the current trading price for the company. Now, if we look at them from a historical multiple valuation, again, we're comparing the company's valuation using a price to earnings ratio compared to how the company has historically traded. Now, what you'll see is we have a huge outlier right here, so we're going to remove that outlier. But once we do that, we can see for the trailing 12 months, the PE ratio is about 27.69, and the average PE ratio over the last decade is about 27.06. So it's about a 2.3% difference between the two, which would lead us to think, unless anything has fundamentally changed about this company, that it appears to be trading right at fair value and in line with where this company has historically traded. Now, if we move forward and look at the multiples valuation from a comparable standpoint, we're seeing how the market is valuing companies that are similar in structure. And the average PE ratio for these comparable companies is coming in at about 25.71. So if we apply Coca-Cola's earnings per share, we come to an intrinsic value of close to $64 per share. Now, the last valuation that we're going to look at is going to be our dividend discount model. How much is the company paying out in dividends, and how much is that dividend increasing over time? So assuming a dividend growth rate of 4.25%, which looks very achievable, especially with a nice spike in free cash flow over the past year, discount rate of 8%, we come to a DDM price per share of about $54. So if we jump over to our output tab and average these 3 valuations together, we come to an intrinsic value of about $58.66, which we can see here is a difference of about 14% between the intrinsic value and the current share price. So does the company look a little bit overvalued? At first glance, I would say yes, but like we saw with the historical multiple valuation, it looks like the company is pretty much trading right in line with how it's historically traded, and there's a clear reason for that. Coca-Cola is typically going to be a company that trades at a slight premium. Why? Predictable cash flows and predictable dividends. This company has been around for a long time, and it's considered a hedge against volatility. This is one of those stocks that investors love to flee to when there's uncertainty in the market. And because of that, this company is going to typically trade at a slight premium, and right now appears to be no different. So with a 10% margin of safety, our acceptable buy price would be about $52.80 per share, so it's not technically within our buy range right now. So I will say overall, this appears to be a very good earnings report for Coca-Cola. While there is some headwinds with the IRS payment and currency fluctuations, it's clear the underlying business is actually growing at a very healthy rate. But go ahead and let me know what you think of Coca-Cola in the comments down below if you plan on buying or selling. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.